Following program is sponsored by Adams Financial Concepts.
About money, a different approach to investing you won't hear anywhere else. Your host, Mike Adams, is a registered investment advisor and works with investment portfolios exceeding over $100,000 in net worth and has a proven track record of managing long-term investments surpassing the markets in the long term. The information shared on the following program is for educational purposes only, and any investment advice given may not be suitable for all investors. And now, here's Mike.
So it's Friday afternoon, and we're going to be talking about money. Back in the 1940s, as we were going into World War II, there was an issue for aiming the very big guns because you weren't close enough to the field. You needed to calculate for the wind speed. You needed to calculate for the weather conditions. You needed to have people sitting in a room calculating where to aim the guns to hit the target. And those people sat in that room and calculated all those figures out by hand. Maybe they had a calculator, a hand calculator, but probably by hand. And the military went to a company and said, "Can you build us a machine that can do that?" And that company said yes. And the company went ahead and built a machine to do what those people in that room were doing. And that company was then later testifying before Congress, and they asked, "How many of these machines do you think you'll ever build?" And that company said, "We think the maximum number of machines we'll ever build is 4 or 5. Now, the rest of the story is the people that sat in that room and figured out how to aim those guns. They had a job title called computer. And of course, the machine that was developed was called a computer. And of course, we have a few more than 4 or 5. But what the computer allowed us to do is compile huge amounts of data very, very fast. And you know all that. We now have cell phones that compute the data very much faster and more efficiently than there was room full of computers that existed in the 1970s. In fact, when the iPhone 6 was released on the first day of sales, there was more than 25 times the entire computing power that existed in the world in 1994. That's a tremendous amount of material, but it gives a lot of data. And as that grows and as that power has come, so has the power to analyze data and to do calculations about the market and stocks. And that's what this is about. There's a couple approaches to building portfolios. There's first of all the tactical approach, where you're looking at prices and momentum and volumes of stock, and you're building stochastic charts. But beyond that, the other side is strategic, the fundamental approach, looking at the 10Ks, the 10Qs, and looking at industries in general. And in that portion, there's an additional two. One is a top-down, and one is a bottoms-up. And, you know, the work I've mentioned a number of times that Fama got the Nobel Prize for, he showed that fewer than 7% of money managers actually do as well as the market when you take their fees into consideration. That means 93% of money managers underperform. But what's gone on is an idea that came up. It started actually a long time ago in the 1920s by a guy named Fisher. He wanted to quantify the analysis of stock price movements. It didn't really take off that much. The concept was around, but it really didn't take off until we started to have computing power that could analyze huge amounts of data. Harry and Max Markowitz at the University of Chicago came up with a concept of defining the stock price movement by two factors. One is the influence of the stock market itself. Stock market has a tendency, when it rises, to lift stocks. People compare it to the tide. When the tide comes in, it raises all boats. When the tide goes out, all boats drop. That's the influence of the market. In addition to which, a second factor was the particulars to the company themselves. That was called the alpha factor, and the market factor was called the beta factor. And the concept sounded really good. Stock price moves because of what's going on in the market. The price moves due to the company itself. Company specific. And from that was developed the idea of modern portfolio theory. Modern portfolio theory said there's an efficiency frontier, that the more risk you take, the higher the returns. Or conversely, if you want higher returns, you have to take more risk. And from that came the asset allocation, to allocate funds between different asset classes. But I would just want to look at one thing. The whole idea of the efficient frontier modern portfolio theory, because it's based on what's called the normal distribution. I'm a mathematician. I got my undergraduate degree in math. I like numbers. I like all of that. The normal distribution is that bell-shaped curve. We know the bell-shaped curve. It's a very special curve and a very nice curve to work with if you're a mathematician. It's nice because it's consistent. 2/3 of all the numbers in the bell-shaped curve are going to fall within what's called one standard deviation. 95% are going to fall within 2 standard deviations. 99% within 3 standard deviations. So it's very nice to work with. And there's an equal number above the average and an equal number below the average. There's an equal number in +1 standard deviation as there is -1 standard deviation. There's an equal number 2 standard deviations plus 2 standard deviations minus. So it's a really nice curve to work with. And that actual curve is part of the Cauchy distribution. It's called the normal distribution because it has a very nice bell-shaped curve. Cauchy distributions always have that same kind of curve. Sometimes they're a little more peaked, sometimes a little more stretched out, but that's a particular class of distribution. Conversely, you have distributions that are like the chi-square distribution, for example, which is like incomes, where you have a huge number down at the lower left-hand corner and a very few at the right-hand corner, but they're way out there. But the modern portfolio theory was built on a normal distribution. Now, there's some things you can say about a normal distribution. And one of those things you can say is the market should be down as often as it is up. That would mean the market would be kind of flat as you go through. There's another thing you can say about the normal distribution is you can calculate how often certain things can happen. For example, if you look at 2008 or 2009, it should only happen on a stock and bond portfolio, 60% stock, 40% bond. You should only get that amount of drop every once 111 years. If you look at October 19th, 1987, based on a normal distribution, that should only happen once every 4 billion years. So obviously, we have another 3,999,000,000 years to go before we see another drop like October 9th, 1987, if the normal distribution was really true. Sadly, I don't believe that the normal distribution is true. But what's developed over that whole thing is financial planning has grown out of it, and financial planning uses the normal distribution to calculate the probability that you won't run out of money when you retire or when you live your life after retirement. So you had a lot of people that came into the time of 2007, 2008, having an idea from their financial planning information, from their financial planners, knowing that they had a very, very small probability that they wouldn't have enough money to retire on. And 2007, 2008 became a very very shocking time for a lot of those people because they did realize they were either going to have to put away more money or they were going to have to work longer. The normal distribution didn't hold. So what was the approach? If modern portfolio theory didn't work because of the normal distribution, how do you correct for that? So that's coming after we get to the rest of the program. But what I'm saying is the normal distribution didn't work then. I don't believe it works now, nor do I believe that the modifications work now. We're going to see that as time goes along. But what do you do beyond that? The idea was if the normal distribution doesn't work as it is, then what we need to do is to give more weight to the outer edges of the normal distribution. We need to build a normal distribution with fat tails. So now we have, instead of a normal distribution, we have a distribution that looks like a bell-shaped curve, but with more weight to the outside corners. We have a distribution with fat tails. So that means we should have as much on the upside as we have on the downside. But if you've ever lived through 2008, 2009, you know that we don't see that kind of distribution. Now, when we come back, we'll talk more about the normal curve. We'll talk more about what's going on and see if we can't come to a conclusion. Don't go away. I'll be back right after the break.
More about money coming up with Mike Adams on Business Radio 1300 KKOL. For more information, click on adamsfinancialconcepts.com.
Lots of people manage investment portfolios. Just a few can manage a successful portfolio and provide exceedingly great service to their clients. Here's Mike Adams from Adams Financial Concepts.
We believe the price you pay should be based on the performance of your portfolio and the quality of service you receive.
You know, Mike, it seems that a lot of companies subscribe to the one-size-fits-all mentality of investing. Does one size really fit all?
Not with us. Every portfolio that we manage is customized to fit each particular client's objectives and risk tolerance. We place our clients' interests first in all portfolio decisions.
If you're looking for a home for your seven-figure plus investment portfolio, call Mike Adams of Adams Financial Concepts, specializing in creating and maintaining wealth for over 20 years. 206-903-1019. That's 206-903-1019. Or log on to adamsfinancialconcepts.com.
Now we return to About Money. There's more information waiting for you at adamsfinancialconcepts.com. Here again is your host, Mike Adams.
So I've been talking about modern portfolio theory and based on the assumption that it follows a normal distribution. That follows into modern portfolio theory. It follows into financial planning. I don't believe that it does at all. And I think 2008, 2009 demonstrated that to a lot of people. To aggregate and say that distributions are normal, even with fat tails, doesn't make sense. I believe there's some things that don't change. Absolutely, there's some things that don't change. And when you look at the value of a stock, ownership in a company, which is what it is, it's the calculated return to the shareholder that counts. And whether the price is up or down, that's an arbitrary number. You know, Baruch said it, Art Cashin defined it, and he said that it's a perception market. If the market believes that 2 + 2 = 5, they'll pay 4 3/4 for it all day long. And my corollary is that the market believes that 2 + 2 = 3, they'll sell it 3 1/4 all day long. Then it's a perception as to what the real value is. The real value is the return that is coming to the shareholder. And it's the perception of that return. And I don't believe that it follows the normal distribution. I don't believe it follows the chi-square. I don't believe that it follows a normal distribution with fat tails, or any cowshed distribution. It would be wonderful if it did. But as we develop computers and the ability to analyze these massive amount of data, you get these approaches and these theories that grow up, and they find some justification for the theory. I remember the first time, my first professional job was right after I graduated from Oregon State with my degree in math, and I went to work for Pacific Gas and Electric. They were the Northern Electric Company for Northern California. And up until that time, how they forecast electrical power consumption, actually, they would take out last year's book, they would count the number of dividers in the book and count out that many dividers, and that would be the new book. But at the time that I was hired, there was a shift going on because they had computers and they had the ability to analyze all sorts of data and predict electrical consumption. It's an important thing to do for a utility, because if you predict too little electrical power consumption in the future, you end with brownouts because you don't build additional capacity. If you predict too much demand in the future, you're going to build plants and waste money because you've got plants sitting idle. So it's a matter of coming up with the right forecast. And we were beginning to use linear regression. That's the analysis. You heard the word correlation, and that's a term that's tossed around a lot in financial planning. Asset classes correlated with one another. Correlation means that there's a relationship. One variable influences another. And during that first year, during that first job, we set up to analyze all sorts of data. We threw everything we could think of into the equation. We had this computer that could handle massive amounts of data. So we threw it all in. And we came up with the most correlated variable, the best predictor of electrical consumption. If you look back in the past, almost perfectly predicted what electrical power consumption would be. Almost perfect. Correlation coefficients run between 0, no correlation, to +1, which is absolute correlation, to -1 means absolutely reversely correlated. When one goes up, the other goes down. This was so close to 1. It was almost unbelievable. You know what it was? The number of prisoners on Alcatraz. The number of prisoners on Alcatraz was the best predictor of electrical power consumption for Northern California. Now you know, and I know, that if that was a true predictor, today Northern California would have no power. What that showed, what it demonstrated to me, is that there can be two variables which run parallel, which are correlated, but there's not a causation. You know, there has to be a causation for one variable to influence another. Just because the two are interrelated and move in the same direction, or move always in opposite directions, doesn't necessarily mean that one causes the other. But we built massive amounts of data with computers, and we build portfolios, and we build theories around these correlations, many times never thinking about whether one causes the other, whether they're really related. Goes back to the concept of asset allocation. If the concept is, if one thing goes down, another will go up. In 2008, 2009, we found that if one thing goes down, a lot of other things can go down too. That was what we found. Picking stocks, to me, is an art. It's not a science. Picking stocks and making money in the market is an art. If it was just a science, it would be whoever had the biggest computer would always win. It's an art. It's not a science. And as I talk about art, it seems only natural to move into My guest today, who is an artist in her own right, who runs a shop. My guest today is Melissa Fevrier. Did I pronounce it? I said it wrong.
You were doing so good, too. It's Fevier.
Fevrier. Welcome to the program.
Thank you.
So tell us what you do.
I own Terabella Flowers, and I'm one of the founding members of the Seattle Wholesale Growers Market here in Seattle.
So let's talk about flowers. Well, why don't we start with your background? Tell us about your background first.
Well, I grew up in a rural California community near Terabella, California, hence the name. And my aunt owned a flower shop over there, which was a big influencer on my life, obviously. And so it came time to start my own flower shop. I did so, but keeping in mind of the community that I came from, and so I source local and organically grown flowers for my flowers designs.
So when you say locally and organically grown, tell us about that.
Well, here in the Northwest, we have a number of wonderful local flower growers, and during the summer months, there's no reason to be buying flowers from South America, Ecuador, if we can get them right here, basically in our backyards. And the growers that we use use organic practices. They're not certified organic, but they are certified salmon safe, which is a wonderful certification program based over in Portland, Oregon. And they will certify the farms and make sure that the farmlands being used are preserved and maintained for the salmon population.
So you mentioned South America and Ecuador for flowers. So tell us, in the industry in general, where do flowers come from that we're buying at the grocery store, that we're buying at flower shops?
80% of the flowers that are sold here in the United States are imported predominantly from South America at this point in time. And
so they're bringing them from South America. What does that do to the life of the flowers?
The flowers that are generally imported are kind of your workhorses of the floral industry. So your carnations, your chrysanthemums, your roses, the flowers that you typically see in a grocery store bouquet.
And how long do they last?
They can last a very long time. They ship quite well, but they're your average workhorse flowers, and you're not going to get your dahlias and your peonies and your garden roses that we love to use here in the shop. They're unique, gorgeous flowers that you don't commonly see in your typical bouquet from South America.
So you started the business, but before you got Terabella Flowers, you were doing other things as well.
Yeah, my background is in hazardous waste management, environmental studies, and it was kind of with that background that I started my flower shop, but not in the conventional sort of way. I wanted to make sure that I was doing my part to keep my industry pretty clean.
So when you say keeping the industry pretty clean, this is using local growers and
low pesticides.
Low pesticides.
Low to no pesticides.
So what does the pesticides do to the flowers when they're delivered?
The pesticides do not affect the flowers. The pesticides affect the communities where the flowers are grown. And because we're not going to be eating the flowers that are going to be coming onto our table, we probably shouldn't if they are from your conventional grocery store. I don't recommend it.
But they do affect the environment.
They do affect the environment, and they affect the communities and the workers that are having to handle these pesticides and what they're taking home to their families at the end of the day.
So the organic growers are not using the pesticides, is that right?
Correct.
So what do the organic growers do in supplement to the, because they have pests too, right?
They do, and generally, ironically, they introduce more pests. There's certain, like your ladybug theory. You have a bunch of aphids in your garden. You bring in some ladybugs, and they'll take care of that aphid population. And once their dinner plate is empty, then they'll move on to the next garden full of aphids.
Ah, I never knew that.
Yeah.
Even when I grew flowers. and I did not have a green thumb. But anyway, aphids were always a problem.
Ladybugs.
I should have just brought ladybugs.
Yep.
We're going to come back and hear more about this. Don't go away. We're coming to a commercial break. We'll be right back.
Stay tuned. About Money returns in a moment with your host, Mike Adams, here on Business Radio 1300 KKOL. For more information, click on adamsfinancialconcepts.com.
Creating and maintaining wealth has been the specialty of Adams Financial Concepts for over 20 years. Every portfolio managed by Adams Financial Concepts is customized to fit each particular client's objectives and risk tolerance. The client's interest always comes first in portfolio decisions. Call Mike Adams today at 206-903-1019 or log on to adamsfinancialconcepts.com to check out their AFC performance. They welcome your review. That's adamsfinancialconcepts.com.
We're back with more About Money. For details on what you hear on today's show, visit adamsfinancialconcepts.com. Now, here again is Mike Adams.
So, in flowers, when I order flowers, I just call a florist or whoever and order a bunch of flowers. I never thought about where they come from, what kind of flowers they are, who's growing the flowers. Tell us about the industry. Where do you get the flowers? Where do they come from? Why do you use certain flowers?
Sure. Yeah, most of the flowers that I get are from the Seattle Wholesale Growers Market that I mentioned earlier. It's a cooperative of flower farmers here in the Northwest area and down through California. And that's where a lot of our event florists and my own particular shop, we can go, and it's basically a farmer's market just for florists. So we'll go in and we can special order the flowers for our weddings, or we can go in and just pick a bunch of flowers for a cooler, whatever inspires us. It's a fantastic, wonderful, and unique experience, and the only one of its kind in the United States at this point in time is a cooperative run exclusively by the flower farmers.
And the advantage is that they're American grown.
American grown, certified salmon safe, supporting new flower growers in the community, the whole farmer florist movement. Again, like the slow food movement, we've got a slow flower movement.
So when you say slow flower, you're not talking about flowers growing slowly. You're talking about
sourcing them locally and supporting the communities that these flowers are grown from, which helps preserve our farmland, helps preserve our waterways.
And helps preserve the salmon.
Exactly.
And the fish.
The trickle-down effect.
Mm-hmm. It's a big help to what's going on in our area for those people that want to preserve the salmon and I like salmon to eat as well.
Yes, me too.
So tell us more about some of the events that are happening around the flower industry.
The flower industry, right. There's a movement, the American Grown Flower Movement, that's happening here. It started down over in California by the California Cut Flower Commission. And they're hosting and contributing to a series of dinners called Field to Vase. And I went to the first one down over in Carpinteria. It was fantastic. Had a local chef come in and prepare all of the food. Got to meet a lot of the local growers, local florists. And Seattle is going to be having one as well on September 12th. And I was flattered that to be chosen as the florist to be featured for this event. And it is open to the public. You can buy tickets for this event online. And you can also come down if you want to meet some of your flower growers in person. You can come down to the Seattle Wholesale Growers Market down in Georgetown and handpick some flowers there as well.
So the flower market you mentioned, is it open mostly to the flower growers market? Is it open just on a wholesale basis or retail?
It is open. It is open predominantly just to the floral industry trade. And on Fridays from 10 to noon, it's opened to the public.
So,
But for the most part, you've got to go to your florists.
so do you get the flowers early in the morning, or how do you select the flowers? I mean, it's, do you pick up all your flowers on Monday and then have them for the week, or do you fill in all week?
Oh, flowers are the most perishable product out there. It's a tough industry because we can't freeze flowers. We can't pre-make a design and then store it off and pull it out when we need it. We've got to turn flowers around in about 3 days for a person to be able to enjoy that flower arrangement for at least a week is my goal. So I'm down at the market pretty much Monday through Friday, sometimes Saturday as well.
So one thing that I've noticed, when you look at a grocery store and they've got the flowers sitting there, you might have flowers next to the oranges, next to the lettuce. What does that do to the flowers?
Oh, it's the worst thing you can do for the flowers. The flowers and cabbage and fruits just don't mix. The gases that are let off naturally by apples and by your vegetables will kind of make the flowers wilt. That's in a vase. Your cut flowers wilt. So if they're being transported together, if they're being displayed right next to each other, it's going to shorten the vase life of these flowers, and these very long-lasting flowers coming from South America. If they're looking wilty in a bouquet, they're either very, very old or been poorly handled or sitting a little too close to the bananas.
So in your case, you keep them segregated in a cooler.
Correct.
So if someone wanted to order flowers, how would they do that from you?
They can order online at terrabellaflowers.com. They can give us a call. They can walk into our store. We're proud to be one of the remaining old-fashioned flower shops that you can go and handpick your flowers from. There's a lot of florists that just work out of event space and studio space, but I chose to deal with the overhead costs of that just so people can have that hands-on experience and walk into a flower shop and have that flower shop sort of smell that we hear about all the time.
And it is a wonderful smell, too.
Yeah.
Yeah, it's fun to be in a flower shop. So, and what is the phone number they can call?
206-783-0205.
And the website is?
terrabellaflowers.com.
That's great. It's wonderful. It's a great service, and it's really an art to make a great bouquet.
Thank you very much.
Thanks for being on the program. So I want to shift, because in a world where you have a certain arts that continue to be year to year, we also live in a time that's rapidly changing. It's having an impact on our life. It's something where, when you think about flowers and think about bouquets, it's something that doesn't change. There's a beauty there that is there. But much of our world is changing. Think about the newspapers. We used to have 2 newspapers in Seattle. Now we have 1. Craigslist came along. Newspapers used to get a lot of their revenue through the classified ads. When Craigslist came along, many of the classified ads disappeared, especially the job ads. A big portion of what was the classified ads. The classified ads disappeared. And as that revenue went away, newspapers began to raise their subscription prices. Subscriptions began to drop. They dropped by 30% within a very short period of time. Now in Seattle, instead of having 2 newspapers, we have 1 newspaper, which seems to get smaller almost every week. And the news stories, instead of being local news stories, many of the stories seem to be taken from Associated Press. There used to be a business section in the Seattle Times. Now it's part of the front section. That's a change that's gone on. And yet, when you think about that, I continued to read the newspaper for a long time. My children never subscribed to a newspaper. They get everything online. It used to be funny because they would say, "Did you hear about such and such an event?" I'd say, "No." Say, "You'll read about it tomorrow in the newspaper." Now, I get a lot of my news online. It's more effective. It's faster. I can read the Wall Street Journal in a fifth the time that it used to take me to read the paper when it was in a paper form. And I think I get almost as much information. Maybe I get more effective information. It's a change that's going on. Think about music and the changes that have happened there. You know, it used to be that you had a group of people that would actually be employed to determine the songs that went on an album. It used to be that record companies would look at recording artists and plan. The first two albums would be losers, and the third album is the one where they would make money. Not anymore. If an artist doesn't make money on the first album, they're dropped. It used to be that you had an album or a CD player or a CD. Doesn't happen anymore. If somebody wants a song, they can download it for 99 cents or whatever. They can choose their own songs. They don't have to buy the entire CD. They don't have to buy the entire album. They can download one song at a time. What does it mean? They don't have to pay $20 for an album to get one song. They get the song that they want. It's changed the industry. It used to be that artists would go on the road to promote or actually they would, I'm getting this all backwards. That's terrible. Today they go on the road. Today they use their CDs to promote going on the road. It used to be they'd go on a road to promote their records and their CDs. It's completely changed the music industry. It used to be that offices would go through a huge amount of paper. That's changed with the electronic office as well. Offices used to go through 17 tons of paper per year. Now that's been cut way back. It's more efficient. It's faster. I went to an electronic office a number of years ago, and what I found is, in the old paper forms, we used to do a lot of paper. We used to do a lot of copying. Things used to get misfiled. Used to be tough to find things. Not anymore. But we're coming to a break. Don't go away. I have more to say about this because our world is changing. The times are changing.
About Money. We'll resume in a moment with Mike Adams on Business Radio 1300 KKOL. For more information, click on adamsfinancialconcepts.com.
Lots of people manage investment portfolios. Just a few can manage a successful portfolio and provide exceedingly great service to their clients. Here's Mike Adams from Adams Financial Concepts.
We believe the price you pay should be based on the performance of your portfolio and the quality of service you receive.
Mike, it seems that a lot of companies subscribe to the one-size-fits-all mentality of investing. Does one size really fit all?
Not with us. Every portfolio that we manage is customized to fit each particular client's objectives and risk tolerance. We place our clients' interests first in all portfolio decisions.
If you're looking for a home for your seven-figure plus investment portfolio, call Mike Adams of Adams Financial Concepts, specializing in creating and maintaining wealth for over 20 years. 206-903-1019. That's 206-903-1019. Or log on to adamsfinancialconcepts.com.
Bound.org.
About Money continues. Remember the website, adamsfinancialconcepts.com. Here's Mike.
So I've been talking about how times have changed, and they're going to continue to change. Think about that car key that you have. Remember there used to be car keys? I can remember one time actually with a car key getting into the wrong car and driving it and feeling, this isn't quite right. And then realizing that key that fit my car also fit another car. They only used to have about 1,000 different keys and producing 1 million or 10 million cars so that the same key would fit any number of cars. Today, you have a key that has a transducer. That transducer, you see the key has a lot of mass. In that mass is a transducer, and that transducer is unique to your car. If you get too far away from the car, that key is ineffective. It's not going to open somebody else's car. It is a radio frequency transducer. And they say that the number of stolen cars has decreased significantly because of that key. It's unique to your car. That's a change. Cash and credit cards. We're starting to see now credit cards may disappear. Credit cards be part of your phone. They'll be unique to you. It'll be a fingerprint authorization. There'll be another authorization. It'll be unique to you, not your card. People will not be able to steal your number because your number will be in the phone, and that's controlled by you. It's going to be a big change. Everywhere you're going to see, we're living in a world where many physical products are actually changed with software. And it's happening very fast. It's happening in the marketplace as well. It took Microsoft 14 years to go from zero revenues to $1 billion. 0 to $1 billion in sales. It took eBay 7 years to go from 0 to $1 billion. It took Facebook a little less than 7 years to go from 0 to $1 billion. Zynga's fallen on hard times, but Zynga went from 0 to $1 billion in 4 years. It used to be that a private company that was worth $1 billion was considered a unicorn. It was really unusual, very unique, very strange to have a private company that was valued at that price, $1 billion. Today, there's 107 companies that are valued at $1 billion plus. Private companies, 107 unicorn companies. Coming back to Zynga, John Deere builds tractors. They build 5,000 tractors a day. When Zynga was running Farmville, or Deere was building 5,000 tractors a year. When Farmville, that game that Zynga came up with, they were selling 500,000 tractors a day. Incredible change. TV is built for an audience of 18-year-old to 49-year-old. From 1948 to 2008, 60-year time period, ABC, CBS, and NBC combined did 1.5 million hours of programming. For those 60 years, 1.5 million hours of programming. ABC, NBC, and ABS. ABC, not ABS. Anyway, I'll get it right. That same year of 2008, YouTube, in 6 months, did 1.5 million hours of programming. All of that to say, investment opportunities are changing, and they're changing more rapidly. When you think about what happened in 1966, the companies that made up the Dow were companies like Anaconda Copper, American Can, American Tobacco, Bethlehem Steel, Chrysler, General Foods, Goodyear, Johns Manville, Owens, Illinois, Swift & Company, Texas Corporation, Union Carbide, and U.S. Steel. Those companies were the companies that made up the Dow, or a part of them. Westinghouse Electric and Woolworth were part of that group. Today, many of those firms that were in the Dow in 1966 don't exist, and some that were in the Dow then are no longer in the Dow. And some companies that didn't exist in 1966 are part of the Dow. Think about Microsoft and Intel, Southwest Bell, Home Depot, Walmart, and McDonald's, part of the Dow. In 1966 was the year they came public. There are companies that in 20 years that probably Those companies don't exist today, but they will in 20 years. Think about Eastman Kodak. You know, they were a company that dominated the film market. They dominated the camera market. They filed for bankruptcy. They're not around. You know, General Motors. During the 50s and the 60s, there was concern actually in the 50s and 60s that the government would break up General Motors because the second largest GDP in the world, the largest GDP in the world, was the United States, and the second largest was Chevrolet. There was a saying that what's good for General Motors is good for the United States. You know, 2008, General Motors filed for bankruptcy. That's not good for the United States. Things change. It's going to continue to change. It's a disruptive kind of change. It happens faster and faster. Use the example many times about the phone. We used to have those black phones, those big black phones that sat in the desk, sat in the house. You know, along came the big mobile phones that were huge, but then came Palm. Palm was disruptive. It made a significant change. But then came BlackBerry, and Palm began to die. And then came the iPhone. You know, all of that has changed dramatically. And not only that, not only is the phone a phone. I mean, you look at what is in the phone, the number of applications. You can get music, you can get computing power. You get more computing power in the phone than we had with those big room full of computers in the 1970s. We live in a time in which things are changing very, very rapidly, and they're going to continue to change. That can be upsetting, but it can also be opportunities for investment, to be ahead of the curve instead of behind the curve. And that's the purpose of this program, is to give you, the listener, insight into what's going on so that you can be ahead of the curve rather than behind the curve, so that you can anticipate and know where things are going and not be left behind. Because there will be industries that are left behind. There will be companies that are left behind. The blue chip companies, I call many times, will become the black and blue companies. They're going to be lost. It's important to be ahead of the curve. If you're going to be making money, it's to be ahead of the curve. And not only ahead of the curve, we're going to see more companies that grow rapidly to 100 or 1,000 or 10,000 times their value within a short period of time. We live in an amazing time and a very fun time. It's an opportunity, and I want you, the listener, to be there. Or as the Boy Scouts say, be there or be square. Isn't that what they said? Be prepared. That's the idea. Have a great weekend. I will be back next week, or actually someone will be here if I'm not here. Have a great week, and I will be back soon.
You've been listening to About Money with Mike Adams, a registered investment advisor. If you'd like more information about what you heard today, or about Mike's investment philosophy and strategy, or if you want Mike to evaluate your own portfolio, click on adamsfinancialconcepts.com. That's adamsfinancialconcepts.com. The information shared on the preceding program was for educational purposes only, and any investment advice given may not be suitable for all investors. Join us again next Friday afternoon at 3 for more About Money with Mike Adams, here on Money Radio 1300 KKOL.
The preceding program was sponsored by Adams Financial Concepts. Creating and maintaining wealth has been the specialty of Adams Financial Concepts for over 20 years. Every portfolio managed by Adams Financial Concepts is customized to fit each particular client's objectives and risk tolerance. The client's interest always comes first in portfolio decisions. Call Mike Adams today at 206-903-1019 or log on to adamsfinancialconcepts.com to check out their AFC performance. They welcome your review. That's adamsfinancialconcepts.com. The following program is sponsored by Adams Financial Concepts.